Hello, this is Will from Will to Trade. You can check me out at willtotrade.com. Fill out the form, get invited for a free 2-week trial to our chat room at Will to Trade. We meet every day, Monday through Friday, and chat about stocks. I give out alerts. Other members talk about stocks they're interested in as well. And from time to time, I make some videos. I've been making a series of videos here today on different stocks that have made some moves yesterday and the day before. And I wanted to kind of go over those stocks. Some we alerted, some we didn't, and talk about how you would trade them, how you wouldn't trade them, those type of things. I made a list of some rules for trading, which I want to show on the screen right here, which I'm trying to show in all the videos here. I want to make trading as simple as possible. I want to help you be a better trader. In our room, of course, I give alerts, but I also want to teach you as much as I can through the videos and in the room as well, how you can trade independently. So you don't even need my alerts, or maybe you and I are alerting the same thing at the same time because we're thinking the same way. So I want to break down how to make money trading in the most simplest way possible in the 3 steps. Step 1, you just have to know what stocks to trade. Sounds easy enough, but there's step 1. Step 2, know which price to buy. Step 3, know what price to sell. Again, this sounds really, really simple. Well, yeah, of course, I'll buy at the right price and sell at the right price and I make a profit. Well, okay, but it is that simple. If you know what you're trading and you know where to buy it and where to sell it, you can make money and you can be a successful trader. So the type of trades to take, these are the type of trades that I take, that I alert, that I recommend, unless you become a very advanced trader. Number 1 are breakouts. Number 2 are groundhogs. Those are groundhog day trades, stocks that are basically trading range bound back and forth from the same support and resistance levels. And then type number 3 would be retracements. Retracements are a little more complex, but we can trade those as well. And then the type of trades not to take would be the 3 C's or the 4 C's, the chop, the chase, the chatter, and the crap. That's the 4th one. All right, so let's take a look at HMNY. HMNY is an interesting stock because it had made some really big moves way earlier in the year. At one point, it went from like $1 to $10 in a day, and I think the next day it went from like $7 to $15. I mean, these were 2 monster days of HMNY, and we did alert them in the room. But then it has kind of faded since. So here is actually, let me rewind this here. Here's yesterday. Now I didn't trade this. I didn't alert this. I alerted some other stocks earlier in the day. I stepped away from the computer. Later, one of the members had mentioned it, and then of course I saw it, and I was like, oh yeah, okay, that's definitely an interesting ticker. And I said, I want to make a video on this one. So this is earlier in the day. This, you wouldn't want to trade this. Please don't trade this. This is what I would call the crap. I mean, with all due respect to HMNY, there's nothing happening here. There's very little volume. There's very little activity. These aren't even really candles. I would call them just blips. So this is what you wouldn't want to trade. So you're not really doing anything. And then bam, all of a sudden there's a huge green candle, but this candle hasn't even fully broken out yet. Some news came out and about some investment firm acquiring 1.74 million shares of HMNY. Obviously traders got excited. That's pretty exciting news. So the stock is in process of breaking out, and maybe you wouldn't even see it on your scanner yet because it hasn't really made a move above the opening price. So here it is at about 445, 450. You probably wouldn't see it yet. Then it makes a move. Maybe you would see it here. It's possible you would see it here. So now the best thing to do at this point is just to wait. You have 2 green candles in a row that are very strong. 1 green candle that's pushed above the opening price. There's probably something happening here. If you're ready to trade it, you want to start drawing lines. You want to start getting ideas of, okay, where can I trade it? Is this one of the 3 types of trades? Absolutely. This is a breakout. So you want to jump in on the breakout. So on this particular candle, the high is at 477. Okay, and if you look up in here in the top left, you'll see the H and you'll see 477. That explains it. Now, what you could do at this point is draw a line. Start drawing lines. So you could draw a line at 480, just as an example. This is assuming that you're seeing it right there. And you would say to yourself, okay, it's pushed up. Maybe it'll pull back for a little bit. Maybe it'll continue to push. but 480 is a line. I like 480 because 480 represents a continued breakout. It represents confirmation of the breakout. So that's a possible place you could buy 480. Okay. So now let's fast forward to the next candle. It pulls back. You're keeping your 480 line up there because yes, if I could buy at 480, that's a great place to buy. The next one gets oh so close. It's kind of like a doji here. We have to wait some more, and we're just waiting. Right now we're in the chop, and we're just waiting. And then we're getting so close, and we're still waiting, and then bam. Now you could buy right there at 480 if you were watching this stock, and obviously as you can tell, volume is definitely coming in here. Obviously a lot more than which is here previously. If you bought it at 480, that's a fantastic place to buy. That's a great place to buy, and you would be really happy. Again, I wasn't in front of the computer. I wasn't seeing this at the time, but this is like an ideal, excellent entry level that you would want to buy. Now, if you happen to see this stock right, if you miss this entry and all of a sudden you see the stock, the high is at 490. Your next level up would be 5 or 501, and I'll draw a line here at 5. Okay. Now, there is not an absolute rule, okay, of where to buy. But in this particular example, I would say buying between 480 to 5 is the best place to buy for an initial breakout. Some people love to buy at the whole dollar. They want to buy at 5 even. Some people love to buy at the whole dollar plus a penny. So I would say 501. And I would say probably if you can get it between 480 and 5 or 501, do it. If you can't get it, if you miss it, you see it later, then you're just going to have to wait. So here we go. Let's fast forward and see what happens. And it gets so close to 5, and then bam, it pushes, it explodes through 5, and it goes to 530. Now, if you bought in this zone here of the 480 to 5, the next thing you'd want to do is draw a line. And you don't really know this, but let's just draw a line at 6, just because, hey, you know what? If it goes to 6, that's $1 to $1.20 up. It's up there. I'll sell at 6. Now, again, these are not absolute rules. Sometimes it only goes to 550. Sometimes it may go to 7. Sometimes it may go to 8, 9, or 10. And you say, well, why do you only want to go to 6? You know, it just, in this particular example, it's a nice dollar to make. Again, if you bought 1,000 shares, you can make $1,000 pretty quickly. Why not? But if you see this candle right here, if this is the first time you're actually watching the stock, now I would recommend not buying. Basically, buy in this blue zone here. Anywhere in here, yes, you're a buyer. You have 3 minutes to make the move. It's not much time. You know, it's quick to jump in. Because if you get in here, you're in the chase. Okay, so let's just look at these, you know, type of trades to take, breakouts. Here's your breakout. Type of trades not to take, the chop or the chase. So here's the chop. I don't recommend that. And then here's the chase. So I don't recommend it. So I don't recommend really below here. I don't recommend buying below here. And I don't recommend buying above here. Down here is your chop, and up here is your chase. Okay. But just be aware that in this example, there's a 20 or 21 cent range where you can buy. There's not an absolute right, exact penny correct. Oh, I have to buy exactly at 480. Oh, I missed 480. I can't buy at 5. No, you can buy at 5. You can even buy at 501. You have a range to buy and you have a range to sell. But below the range to buy, it's not right. And above the range to buy, it's not sell. It's not right either. So let's fast forward and to see what happens. And then I just know this because I know what happened. It got to a circuit breaker halt. Now, again, if you saw the stock here during the halt, you have to draw these lines. Just draw these lines out here. Kind of see what it does. It's obviously bull flagging. This is as textbook as you can get as far as higher lows, right? I mean, this is about as straight of a trend line as you could possibly think of. I'll even draw a trend line here. Let's just draw it. Trend line. We'll just say from here to there. I mean, look at that, right? Pretty straightforward trend line. And now, I mentioned this in another video on stock, INVN. If you're new to trading and a stock gets halted and you're not in at the breakout point, and I mentioned the breakout point, 480 to 5 or 501, then you want to just wait. Don't put an order in. Don't trade. Just wait. Say to yourself, okay, you know what? I missed the breakout. That's okay. I'll get the next one, or maybe there's another trade to be had on this particular stock, but I'm just gonna wait. So just wait. Now watch what happens after the halt. Fantastic. Look at that. Fantastic. It rips through 6, it goes to 650, and it's a green candle. Now, if you bought in here, and if you sell there, you're super happy. You're making $1 to $1.20. It's a fantastic trade. It's a breakout trade. It's an A+. Congratulations. If you did it, send me a message. I'm super, super happy for you. If you are only witnessing the stock at this point, now you're going to want to draw another line. Okay, let's draw a line at, say, 651. Okay, and I'll make this 651. We'll make this another blue line. And this has to be your line where you say, you know what? If we can get to 651, then I'll buy. Because if we get to 651, it's the next leg up on the continuation of the breakout. Otherwise, I have to wait. Now, another line you can draw, and this is where it gets a little more advanced, is up here. You have 531. Again, you'll look up here and you'll see the H, which is the high, 531. I'm going to draw this line here at 531 because this is where it was when it was halted. We'll make this like a purple line and we'll come back here. So now we'll just watch this here. And notice the next candle's red. We're not trading. Now we're pulling back here. We're not trading. And we're definitely have a sharp pullback. We're not trading. This is the chop or the chase. We don't want to trade here. We have 3 candles to get in and we have maybe 3 candles to get out. It's quick, right? So let's see what happens. And now it goes up, it goes up. It's just purely choppy here. This is clean. Look how clean up this is, right? But look how now all of a sudden it's choppy. So we're not trading the chop. And then it comes back, and look at that. Now this becomes your more advanced trade, but still a trade you can take. Definitely more advanced. The retracement right here. This is the retracement, number 3. Okay, we drew our line at 531. Why did we draw a line at 531? Because 531 was the high before the halt, high before it took off. And when it took off, it gapped up. And stocks like to fill their gaps. They don't always, but they like to fill their gaps. So you have a gap here, and now you have a gap fill. You could either buy right here at the 531, or maybe place an order at, say, 540, right? I'll draw a line here at, say, 540. Okay, this gets a little more advanced, but I'll go ahead and show you what we can show you. We'll make this a blue line again. Now it pulls back. Now we got to be really quick, and we would say, you know what? If we can push back up, I'll buy back up here at 540. I still have my line here at 6, because 6 is where we would have sold if we bought here. I would still want to sell at 6, but instead of buying at 5, I would buy at 540 after the pullback. Because when you see this pullback, one of 2 things is going to happen. It's either going to flush all the way back down where it started, or it's going to turn back up and make a push to at least 6, maybe more. We don't know. Let's see what happens. And then it pulls back. So we're not a buyer yet. At this moment, we've drawn perfect lines on our chart. We have the initial breakout zone. We have 6 dotted, which is a great place to buy or sell, a great place to sell. We have 651, a place where we would definitely buy if it continued to break out. Let's say it would go to 7, 8, 9, 10, whatever. Then, okay, now we're definitely going to be buyers there because the stock will ramp up. But keep in mind, we're already looking at like 10 minutes left in the day on a Friday. I don't know how much more activity stock can really do, 10 minutes before the close of the whole week. But we have our line at 540. Look at that line at 540. That's what's really important. The stock's going to do, at this point, the stock's going to do one of 2 things. It's either going to pull back or it's going to bounce back up. So now you would place your order there at 540 and say, you know what? If I can get in at 540, why not? Let's give it a spin. This is a retracement trade. And sure enough, it pushes back through 540. It consolidates. It pushes up again, and then it sells. This second trade here is not necessarily a chop trade. Okay, this is the chop. This is the chop, and this is the chop. This is the breakout. This is the place to sell. This would be a continued breakout, and this here is the retracement trade right here. And it's definitely more advanced than the breakout, but it's the kind of trade that you can take and you just have to wait for it, and you would buy in here and you would sell there. If you were really confident, you could even buy in this purple line here and maybe put your stop, just below there. So basically this area here is a place to buy. This area here is a place to buy, this area here is a place to buy, and this area here is a place to sell. And then sadly the stock pulls back, you don't buy again, it's not a retracement again, you just let it do what it do, and it pretty much flushes the rest of the day. So this is a candle by candle, minute by minute example of HMNY. Again, we did not trade it, we did not alert it, but I felt it was a fascinating enough move that I wanted to make a video on it. Hopefully this video makes sense. If you like the video and you understand it and you're excited by it, go ahead and give me a thumbs up. If you really like the video, go and want to get alerts to these videos, go ahead and subscribe to the channel. And if you are interested in joining our room, just go to willtotrade.com, fill out the form, and we'll get you all set up for a 2-week free trial. Thank you so much. Have a great weekend. See ya.